Whether you like it or not, Americans are defined by their credit scores. Credit scores power the American dream.
This is Lamine Zarrad, a former bank regulator who thinks he has a solution to transform America's credit system.
Consumer credit sits at the very center of the US economy, but there's a major problem. 150 million Americans have poor credit or no credit. This traps people in cycles of debt. As an immigrant, I had to learn this firsthand. But what if we could help 2/3 of the adult population in this country climb out of this downward spiral?
Lamine believes that the key to solving this crisis lies in uncovering a major flaw in our credit system.
Why do we have bad credit, and what can we do about it? The short answer is that many people have bad credit because the lenders are using bad data. Credit scores are born in a time where data which simply wasn't available.
So what is his big idea?
What if we could use technology to rethink the way credit scores are measured? Let me show you how.
This is Stand Together Presents, stories, ideas, and advice from changemakers tackling our biggest challenges.
Cameras are sweet. Take one.
Think of our economy as an engine. Well,
Great. Can you say that in another way?
yeah.
Take two. Call Mark.
Okay, so when it comes to understanding credit, Lamine says it helps to think of the US economy like a car.
What makes the United States a unique country, and certainly a unique economy, it's driven by consumer credit. That means that our economic engine revolves around each consumer's ability to borrow money, spend that money, pay it back, and borrow it again. It is a cycle.
That all sounds simple enough, but in order to understand Lamine's solution, first we need to answer two questions. Where did credit scores come from, and what do they even mean?
In 1950, America went through the commercial boom and consumers were buying things like vacuum cleaners and dishwashers. And then you had lenders who wanted to sort of profit by giving people access to capital, but they really couldn't determine whether someone is a good borrower or not a good borrower.
So in the 1980s, banks adopted the credit score as a simple way to classify how reliable a person was to lend money to.
The adoption of the credit score was very much driven by government policy. The intent was to protect the consumer against discrimination behaviors. The credit score separated borrower from, their race, their gender, their geography.
But Lamine says this created a new problem. The credit score became just as outdated as, everything else from the 80s.
It's an amazing picture on that.
Think about it like this. The data that makes up your credit score is actually only a fraction of your total spending habits. So a person might be more financially responsible than their credit score shows, but a bad score can blacklist them from the American dream.
I don't think most of us really understand how important just 100 points can be when it comes to impacting one's life. 100 points can be the difference between being able to drive a car to work and not being able to drive a car to work. 100 points is the difference between being able to live in a house and not live in a house. It is existential. It is a paradox. You have to have credit to build credit. But if you borrow money with bad credit, there are fees associated. And so those purchases can haunt you for the rest of your life if you don't know how to manage the repayment. And so the card's already stacked against you. You may think that the best path forward to fixing the system is more regulation or regulation in general. But as a former bank regulator, I can tell you, the best path forward is through technology and innovation.
Okay, but what is the actual solution here?
Here's the thing. We live in the information age where consumers carry this massive data profile within their purchasing history across different financial institutions that are now readily available with a consumer's permission. People are already making good financial decisions every day. And now we can use technology to reward them for this behavior.
So it's a visibility problem. Banks can't see enough of the good spending a person does. Lamine says that if people were able to share more of these everyday payments on things like utilities, phone bills, and subscriptions, it could dramatically improve their credit rating.
Americans pay $4.6 trillion in bills annually, so the opportunity to make those payments work for them is huge, because together they create sort of a full picture of the borrower.
Typically, lenders will offer loans specifically for people with bad credit, but those come with extremely high interest rates that often just make things worse. However, Lamine is part of a growing group of entrepreneurs that think they can help more people actually qualify for the good loans that are out there.
What's exciting today is that there's a new generation of companies that are leveraging technology to create access to credit. I started a company called Stellify, specifically to allow consumers to extend the most intimate details about their financial lives to lenders based on real-time data.
What makes his app interesting is how it reports a person's spending. Here's how it works. Instead of paying monthly bills directly from a bank account, users set up StellarFi to pay those bills on their behalf. All of the bills are paid on time, and StellarFi reports these on-time payments to the major credit bureaus.
As a result, every single one of those bills now counts toward your credit score.
Today, StellarFi has over 750,000 users, and so far the data's promising. In the first 5 months on the platform, their users have seen an average credit score improvement of over 77 points.
We've seen people's lives completely transformed. Our customers have been able to buy homes, buy cars, and start businesses just a few months after using our product. In fact, we just met a gentleman who improved his score by over 120 points. He couldn't qualify for a house before. He was able to get a score to a point where he qualified for a mortgage and now was able to purchase a home in one of the toughest economic climates. We want to use innovation to empower people and to break the cycle of poverty.
Lamine says even if you already have great credit, this issue still impacts you in a real way. Opening up access to credit for more borrowers will improve the economy for everyone.
Our economy is an interconnected ecosystem where people, financial institutions, and many other stakeholders interact in a symbiotic way. If 150 million people, 2/3 of the adult population, suddenly had more access, lower interest rates, more disposable income, effectively making the economy a lot more efficient. And an efficient economy is an economy with less taxes, more accessible goods and services, cheaper healthcare. Credit score improvements at that scale can absolutely transform the country and truly supercharge that economic engine, unlocking the potential of the hundreds of millions of Americans that are being left behind.
Stand Together partners with changemakers tackling our biggest challenges. To see more stories, follow our channels. And to learn more about how you can partner with us, go to standtogether.org.